Welcome to Into the Flow Zone, a complete A to Z journey in navigating the complex futures market. My name is Renko, and I will be helping you out on the path of profitability using some of the most powerful tools at our disposal, order flow analysis. Now, why do I put this free course online? In my humble opinion, there is too much bullcrap online. I'm not the best trader out there, if I'm honest. I do make mistakes, just like everyone else, but I do have a solid understanding of the futures market and can help you understand the nuances so we can grow together. As I see prices rising everywhere, trading is a very solid second income. Even with a small account, some time and work, we can make significant change into our daily lives. I'm making this content to share my knowledge, so when shit hits the fan, and believe me, it will, we all feel it, you can have a skill to fall back on and make money even in bad circumstances. I had the question of making my content a little more easy. I was in my home country last week and several people were interested in learning my more advanced stuff, but don't know how or where to start from the beginning. So I decided to start from the beginning, making this course from the most basic part, simple candlesticks, into pattern recognition, into market structure, and beyond. So what is order flow trading and why is it so powerful? At its core, order flow trading is about understanding real-time buying and selling pressure behind price movements in the markets. In trading, order flow lets you see that strength through volume and price at which trades are made, helping you anticipate which side might win the battle. Especially in the futures market, order flow analysis shines, offering clarity amidst chaos. It helps traders make informed decisions by revealing the market's underlying momentum beyond just price changes. Let this course be your roadmap through order flow trading. We will start with the basics of the market's candlestick patterns and progress through advanced techniques, live trading examples. Whether you're new to trading or looking to refine your strategy, you're in the right place. If you're ready to demystify the futures markets and learn how to trade with confidence, you're in the right zone. The flow zone. So hit that subscribe button, ring the bell for the notifications, and let's dive into the fascinating world of order flow trading together. Stay tuned for our next episode because this course will go over everything you need to become profitable. So without further hesitation, here's an intro to start episode 1. Okay guys, let's start episode 1 on the drawing board as always. So we are gonna talk firstly about candlesticks. As you can see, I am drawing a candlestick right here and one right next to it. Now there's two different kinds of candlesticks in the market. It is bullish candlesticks or green candlesticks and bearish candlesticks or red candlesticks. The bullish candlesticks represent buying strength and red candlesticks represent selling strength. Each candlestick is made out of a few components, which is this body and these wicks. Same here, a body and two wicks. Sometimes you have one wick, sometimes you have no wicks at all. Now, a bullish candlestick, which signifies buying strength, will have its open here and its close above. So this is the close, this is the open. A bearish candlestick will have its close below the open where it is right here. So a long green candle indicates strong buying pressure, while a long red candle points to dominant selling pressure. It's not about the length, the relationship between the open close, high and low tell us more about the market sentiment. Now, let's go over the significance of the wicks. Wicks reveal the story of price battles between the bulls and the bears throughout the trading day. A long wick suggests that buyers tried to push the price up, but sellers won by the close. Conversely, a long lower wicks indicate sellers drove the price down, but buyers came out on top by the end of the session. So let's visualize it with some other examples. Like when we have buying pressure, switch to the green, you might see something like this. We have a candle. Sorry for my drawing skills. So we have the open here. Price has been driven up till here. Sellers have stepped in and closed the candle right here. At this point, a new candle will open, driving the price up. Okay. Sellers will step in again, driving the price down. A new candle will open. Sellers will try to push the price down, but buyers keep the price up, and we form a new candlestick. Now this kind of candlestick that I'm showing you here is called a hammer. A hammer will represent a shift in market sentiment. But before we go on to the hammer, I'll show you something else first, and that is a doji candle. So a doji candle is just like a long wick, and the markets open and close will be in the same position, signaling indecision in the market. So like a tug of war where neither buyer nor sellers gain their ground. So it's a sign to pay attention, as often it precedes a shift in the market direction. So just like the hammer and the inverted hammer will signal a shift in market direction. I'm just going to draw them out once more. We can have a hammer, a bullish hammer, and we can have a bearish hammer, and we can also have an inverted hammer, and switch to green, inverted bearish hammer. So these are candlesticks that represent a shift in the market structure. So what does this mean? We often see this at the top of a trend or at the bottom of a downtrend. So this is at the top of a trend, and this will be at the bottom of a downtrend. Now what does it mean? Let's say, for example, we have a hammer right here. So candle right here, and another candle right here. So prices been going up, prices been going up, and then prices been going up, and sellers are trying to take over. See, sellers are trying to take over, hence the long wick right here. But the buyers keep buying this up. So there is a fight, a tug of war. Now, what will we need to be sure that there is a shift in market structure? It is that these sellers right here, I will put this in blue, is that these sellers right here need to take over. Now we have different candlesticks representing this, like an engulfing pattern or a morning star or an evening star. So let's see how that looks in my drawings. So an engulfing pattern would look something like this. Green again. So we have a hammer, and next to it we're gonna have a red candle. So this is the close. So here's where we open our candlestick. Price goes up, sellers smack the price down, and we have a close below this wick, because we know sellers are present here, and we close below. So from here the sellers are taking over. This is an easy representation of the market. Now remember that in the markets nothing is as easy as this, so we'll just jump into some charts. Right here we have an ES chart. This is a 60-minute chart. Let's go find some of these candles in the wild. So we're looking at the tops and the bottoms right here. Here we have a clear example. Right here. Let's maybe, I'm gonna just try to do it like this. Beautiful. Voila. So we have a clear example of how it should look like. Market is coming down with full force. Right here, right here, right here. We have this close. The hammer signaling buyers want to buy in. Sellers smacking it down. So we still close here. We open back up and we take out this line. Next to it, we have another hammer and we take out this line again and price goes up. So this is an example of a hammer. Then we have a big ass range here, which we're not going to talk about right now. So here we have an inverted hammer, which also signals a reversal. So same. I'm going to do just exactly the same, because this is an easy way. Just found this out. Didn't know it could be so easy. Okay, let's do it like this. Put this on here. All right, green, bam, nice. So price has been going up, nice little uptrend. And right here we have our first inverted hammer. So what does this mean? Price is going up full force. We have a big green candle right here. Next to it we have the open right here. Buyers are trying to push here, but sellers smack this price down and we close below. Another attempt from the sellers to close. Buyers attempt to buy this one up. Let's just throw this in the trash for a bit. This is up. So buyers are trying to push price up right here. And here again, you will see this line and this wick is where sellers, this is an S by the way, sellers are smacking the price down in the same area and we shoot down. So these are indeed examples of how candlesticks can work. Now after this big downtrend right here, we have a doji candle. Let's do this again. I like this. All right. So here we have a big doji candle right after this huge sell-off. And this doji candle is a sign of indecision. Market doesn't know if it could go up or down. So we have some ranging action right here. Another doji candle, another doji candle. So this is market indecision. What do we wait for, guys? We do not make a decision right here in this range. I will draw out this range. So we notice this range is a range of indecision. So what do we see here? We come out of this range. We get another doji candle, another doji candle, another hammer candle. This is all indecision. Sellers are trying to make prices go down, but get bought up very easily. Buyers are trying to buy the price up, but it gets stolen very easily. And only when we take out this line here, price is reversing back up. This is a fight between buyers and sellers that you want to see. So what more is there to say about candlesticks? Not much. The thing you want to know, the thing you want to remember is that everything you see on a chart, right now we are here, this is the price where we are now. Everything you see on the chart is past data. This is data that has already happened, so we cannot predict what is going to happen right here, where price is now. We cannot predict what's going to happen next. So we have to anticipate. How can we anticipate what is going to happen? That's something called market structure. I will take another screenshot of this because it's easy. So this is a 60-minute chart. Now, what is the basics of market structure? What is the thing you gotta realize about market structure? When we are talking about market structure, we are talking about lows and highs. So I will put the lows in red, like this. This is a low. 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 And now we'll put the highs in green. So like this is a high. This is a high. This is a high. This is a high. Start to notice something. While we are in this uptrend, like this, the lows, they don't get taken out. So we need to know that we want to take out the highs. See what I mean? We're going to train our eyes to spot these highs. And we're going to train our mind not to go short while the previous lows aren't taken out. Let's go about time frames once more. So when we have a candlesticks, let's just draw out 3 candlesticks. Let's assume this is a 5-minute chart. So we have a bearish candlestick. Now I'm going to do it differently. You gotta start lower or it won't work. So we have some bearish movement. This is the best candlestick ever. Voila. All right. And our next candlestick, where this closes, try to take it out. And we end up green. And the next candlestick takes over. And we end up green again. So assuming this is a 5-minute chart, how would that look on a 15-minute chart? Well, we know that we bought and sold in the same region. So it would just look like this. What is this? A hammer. So a possible reversal. I'm not saying every hammer is a reversal. I'm saying a hammer candle could potentially signal an upcoming reversal. That's a completely different thing. So let's see right here. We have some big indecision right about. Zoom in, zoom in, zoom in. Right about here. We have a nice doji. An entire department of doji. And here we have a hammer with a doji. So let's just check it out on how this looks on a 15-minute chart. Here we go. So this is the range right here. And this is the point where we had all these kinds of dojis. Now, how can we spot a reversal here? Just reading these candlestick. We're going down with power, we're going down right here. Put on my colors. Right here is a first buying aggression. So we see the next time sellers are smacking it back down, and we get some more buying aggression. Buying, sellers smack down, buying, sellers smack down, sellers smack down. Buyers are trying here. And what do we have here? This little doji. Price is going down. We get a hammer. Top of the hammer taken out. We have a doji again. We have a doji again. We have a hammer again. Top of the hammer taken out. See where I'm going. So you cannot trust just one candlestick to give you the entire information. Now if we look at this back in a 16-minute chart, this hammer candle is the entire reversal that we spotted. Okay guys, I will be releasing my next video on Thursday. Next video we will go over market structure, how we can see market structure through a volume profile and how the market behaves at certain levels. Now I don't recommend we go too deep into the candlesticks. This is just the pure basics of order flow, because we need to know how buyers and sellers interact on a chart. We need to be sure that it is past data that we see and not new data that has been formed. We cannot trade candlesticks alone. Some people can do it. Some people believe in candlestick patterns. I do personally not. I believe in order flow. So that's about it. If you have any questions, please put them in the comments. I will get back to you as soon as possible. We are still a small community, so I can provide you the informations you asked for really fast. Also, don't forget to subscribe and hit the notification bell to get updated for Thursday's video, which will be about market structure. I will see you then. Ciao.